please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, we have green on the screen. It's a Tuesday morning after the drubbing that we saw yesterday. A bit of green is what we have on the screen, and that's pretty good news. Though the breadth of the market still in favor of the. We pull up the advanced decline ratio. That'll tell you the picture. The Nifty Bank, a relative underperformer, but a whole host of stocks are doing today. In the last few minutes, we have seen buying on select names like Maruti Suzuki has done quite well. Sun Pharma as well is spiking up, and HUL as well is doing quite well in an otherwise dullish market. So we should pull up some of these stocks. Hey Mangalam, good to see some green.
Good to see some green, though I would be circumspect right now as far as this green is concerned. And let's see how we end. That will be more important. But you spoke about the red and the green lines. Now they're absolutely even, Stephen, kissing each other. And we're seeing some purchase come by in a couple of these mid caps which have taken a lot of drubbing. So the likes of NIIT Tech should come up for you. We saw a sharp rally up all the way up to 1,000. Then it fell up to 870. Currently recovering its lost ground at the high point of the day. We have Just Dial 2, which is moving higher, and Divis Labs. So a lot of these mid caps are doing well. Let's see where they end. But as of now, we're seeing some purchase in a lot of the mid caps. First up, we'll take you through all the top stories. Among the biggest losers on the Nifty today is Cipla after CNBC TV18 accesses the US FDA observations for the Goa unit. Management says the Goa unit observations are procedural and addressable in nature. The stock recovers a little from the lows.
And GSPL tanks close to around 7%. The company plans to acquire 28% of Gujarat Gas from Gujarat State Petroleum Corporation by way of interstate transfer. The management tells CNBC TV18 that they will be paying 3,200 crores to fund the transaction. Hence, their debt will increase to 3,500 crore rupees from around 250 crore rupees post the Gujarat Gas stake purchase.
Aviation stocks in focus as February domestic air passenger traffic growth comes in at 24.1%, and that, remember, is the highest in the last 1 year.
And Vedanta is lower in trade. It appears like it's a top loser. That's because the stock has adjusted lower for its ex-dividend.
Elpro International soars 16%, 17% as the board approves to sell 1.25% of their total 12.75% stake held in PNB MetLife Insurance for 125 crore rupees.
All right, then keep an eye out on the broader markets. A few stocks are moving around. Just Dial has spiked up in the last few minutes. You have Vocart as well that's giving you some green. So a couple of these stocks, they're doing quite well in the last few minutes. In fact, they're moving to the high point of the day as well. A few of these names, so keep an eye out on them. Even pull up EIH Associated Hotel. Now that stock is up roughly around 15%. So keep an eye out on that one. Volumes as well are picking up. Normally not very high volumes, but today the volumes are quite high. So that moves to the high point of the day. But let's get a quick technical check. How do you trade the Nifty from here? We have some green on the screen, Ashwani, early this morning. What would you do? Is it a good chance to go short on it? Or do you expect a bit of a relief rally after the kind of selling that we've seen?
See, the market trend is very, very strongly down. And, you know, even a fancy relief rally will need some sort of confidence from the bulls. As of right now, this is a nice short covering rally from the lows. You know, if, say, you were in a strong uptrend and the market gave you a gap down, you would tend to believe that at some point it will go up. Similarly, you know, if a market is in a very strong downtrend and you see this kind of 1 hour short covering rally, obviously as a bear, you want to get short on these levels. At some point, that trade will fail, but that is the right trade to take because the Nifty futures is almost at 10,150, and from here the risk reward is favorable to getting short both on Nifty as well as Bank Nifty. Because once the sellers come back, I think the market will retreat fairly strongly and quickly. So that is a view we are taking. Obviously, all views need to come with stops. So in case 10,000, 170, 175 starts to get broken, then, that view is probably, cancelled. As far as individual stocks are concerned, Cipla is a sell with a stop of 550, target of 515. BEML is a sell with a stop of 1025, target of 990. And NIIT Tech is a buy with a stop of 885, target of 1010.
Ashwani, we are seeing some bit of purchase in a lot of these consumer names. HUL, for instance, is at the high point of the day. Marico 2 is sitting with gains of 2% plus. And now as we speak, ITC2 is closing in on the higher end of today's trading range. Is that a good place to hide and protect capital if one wants to keep away from the volatility that we're seeing on a daily basis?
See, I've been saying that this year will be a consumer type of year. So Jubilant, HUL, etc., Marico, all of these companies, they may not appreciate a whole lot. Maybe they'll go up 10-15%, but they'll keep you safe. I think IT, banks, etc., they will keep facing volatility because either global markets start to misbehave or rates go up here, etc. So that is one group which is likely to do well, where demand does not often get impacted by short-term factors.
All right, Ashwani, thanks a lot for that. We'll take your advice and keep an eye out on the levels that Ashwani has just suggested. But let's move on to the stock on our radar right now. The news that is hitting us is Cipla. That one's lower. CNBC TV18 has accessed its USFD observations to Cipla's Goa unit. Ekta joins in with more details. Ekta, what are you picking up?
Well, it's important to put this entire news into context for Cipla. Now, basically the news is that their Goa unit, which is one of their most important units when it comes to the US business, was inspected by the US FDA in January of this year. So that was inspected from the 22nd of Jan to the 25th of Jan, and it was a product-specific inspection. At that point in time, the US FDA, post the inspection, issued them 8 observations. Now, remember that these 8 observations, while they sound large in number, we have to look at the kind of observations that they've received and the remediation process which has been undertaken by the management as well. So, for example, while there are 8 observations, the street is largely of the view that they could rather be procedural in nature, but it depends upon the kind of reply that they would have given to the US FDA. So, there are some concerns about maybe 1 or 2 observations. So, for example, the first observation stands out as a particular type of concern according to analysts, and how exactly the company would respond to the first observation would determine the future course of action. Now, just to put it into perspective, it is also important to note that the management has said that they have received product approvals from this particular plant post the inspection that had taken place. Now, we need to see when exactly these products received approval and whether or not it was over a staggered period of time, because we have in the past seen that maybe a company receives observations but they receive an approval right after, and then the approval stopped from that particular facility. So those kind of technicalities have to be taken into consideration, but the management has clarified that they have received approvals from this particular facility, and that's the reason that you've seen the stock recover on an intraday basis as well. So it doesn't mean that just because of the number of observations being large, the plant will probably see some amount of US FDA issues. It is also the nature of the observations as well as the kind of response that the management has given to the US FDA, which would be important. Having said that, we obviously have to monitor developments from this particular facility, see the kind of approvals coming out as well, and not to mention that this is also one of the most important facilities when it comes to the US business.
Okay, all right, Ekta, thanks so much for that. Well, keep an eye out on a couple of stocks on the broader markets as well. NIIT Technologies, Ashwani just gave a buy call on that one. Just take a look at the intraday chart. Remember the stock trading in the red. Now it's moved into the green. It's trading with a gain of around 3%. So keep an eye out on that one. The stock is moving high and it's moving higher on very, very strong volumes. Even Shree Cement, remember the stock has seen a sharp correction from around the 21,000 odd mark. From there, in fact, it saw a correction, but in today's trading session, volumes not very high, but that one as well moving higher as we speak. Well, on that note, we'll slip into a short break. On the other side, we'll get chatting with the management of Newgen Software Technologies. Stay with us.
Welcome back. A couple of stocks on the broader markets doing fairly well. Fortis Healthcare pops onto my radar. That one's at the high point of the day. Along with that, we have Berger Paints too. Consumption, Ashwani, remember, said that is a good place to protect the capital, and that one, Berger Paints, is seeing some recovery from the low point of the day. Back into the green, we'll keep an eye out on that one. But the stock on our radar right now is Newgen Software Technologies. Remember, it listed this year, the issue price was 245, the stock trading a tad bit below the issue price itself. The company has been recognized as a leader by Forrester in their wave reports. We're joined by the chairman of the company, Mr. Diwakar Nigam. He'll tell us what this means for the company's business prospects going forward. Congratulations, Mr. Nigam, for being recognized as a leader. If you could explain to us what exactly does this do for your business going forward, and what are you the leader of in terms of market share? What is the market share that you have, and what kind of prospects does this open up for you?
Good morning, and thanks for calling. See, Forrester is one of the leading research and advisory firms.
Right.
And we have already been rated the leaders in process automation and enterprise content management. Now, this is the new one, which is cloud-based dynamic case management. See, what happens is that once they do investigation and research on about 20-25 products, and if we get rated in the leaders area, then it means that it's a great advantage which we have. Our existing customer feel that they have the comfort of being with the best platform, and their investment has been right, and they can keep doing further investments.
Correct.
While the prospect thinks in terms of when they raise RFPs, and things like that, they will invite you because they will like to go with one of the best products.
Okay.
So I think it's a great honor, and it gives us the opportunity to get leads, get RFPs.
Yes.
And anywhere in the world. So now, anyway, we are there in U.S. market, and U.S. market is cloud-based primarily.
Right.
And hence, being the leader in the cloud-based dynamic case management opens up a lot of prospects for us.
Superb. Mr. Nigam, you're sounding quite excited about this, and it's an honor, as you said. If you could tell us how much of your revenues come in from the United States, and, with this recognition of being a leader, what kind of opportunity can it throw up for you?
See, it's a continuous pursuit for recognitions for any product company. And every step adds into our benefit. So I think at the moment we are getting about 26% of our revenues, 28% of our revenues from US.
Okay.
And we think in going forward in the future, it will increase. The market share in US will grow up much bigger.
Right, Mr. Nigam, the future prospects, as you said, are looking fairly bright. So let's talk about the quarters that went by and the quarter that is likely to just come in the very near future. The last time you spoke to us, you said that 40% of your business comes in the first half of a fiscal. You haven't reported your 9-month numbers and, of course, not the fourth quarter numbers as well. But the second half, you think you can end this year with a 500 crore in terms of top line, given that you've done 200 in the first half?
I think so. We are going to be in line with our projections, and we will maintain our growth trajectory as we have been doing it for the last 3-4 years. So I think we are in line. And obviously, the last few overs matter. They can make a little bit of change. But I think we are in line with that.
Right, Mr. Nigam, you are in line. The last few overs matter. We knew that very, very well on Sunday night when we had Dinesh Karthik going and then hitting the 6 of the last delivery. So that's great news, And your revenues have grown at a good clip as well. You're talking about 500 crores. But the margin improvement is not coming about. We always understand when revenues grow, there's an operating leverage that plays in there. And then, in fact, you see margin improvement. But that's not really happened. So tell us, what's going on there?
Yeah. No, it will happen. It will happen. And we are a growing company. We are competing in the world stage. You are seeing these recognitions by these people. So I think we have a long, long way to go.
Right. But Mr. Nigam, explain to us, why have the margins from 20% plus, they've come to around 16%, I think so.
I think that's an old story.
Right.
Because that was one particular year where it happened.
Absolutely.
And after that,
all your viewers want to know, they want to understand this googly. what's going to happen? I mean, what kind of a margin can they look at going ahead? Can we work with around 20% going ahead? I mean, FY19, FY20, if that was a one-off, then you're expecting to bounce back, right?
Yes, they will continue to grow every year. Okay. So I think that's all I can say. And the reason is there because that was the year we were growing, and then the Middle East market failed, and I think that we have explained so many times. But I think our margins will start growing now.
Okay, we'll take your word for that, and we'll watch out for those developments as well. But Mr. Nigam, if you could tell us, some of your clients, they are the likes of ICICI Bank, Yes Bank. You have a lot of the PSU banks in your repertoire of clients as well. Now, with the scam and current credit growth crisis, is there a hit, or is there a likelihood of a hit to your business from these PSUs?
No, I think for us, the business is looking up because most of these banks are going to go for automation. And automation is the way out.
What are your debtor days?
Pardon me?
What are your debtor days?
Debtor days are this time are going to be much better because we have taken some actions on the...
If you could explain what was it before and what is it likely to be?
Previously, it was almost about 200 days. But that was primarily because quarter 4 is a very large quarter for us. And hence the number of debtor days are higher. But for the current year, we will be able to improve it.
To what?
To what?
Something like 180, 160 days, 150. The target is 150.
All right. Final question, Mr. Nigam, before we let you go. Very quickly, you had won an order coming in from Madhya Pradesh. That was with regard to digitization. You're expecting any more such orders in other parts of the country as well?
Yes, I think that there is a lot of digitization happen in government and PSUs. And we will get our share of the business.
Okay, fair point. Thanks a lot, Mr. Nigam. Wish you good luck for the future prospects of the company, but we'll definitely be watching out for your margins going forward and your debtor days reducing. With that, we'll slip into a short break. Come back, we'll talk about GSPL. That stock is down by over 7%. We'll get you excerpts from our conversation with Manish Seth, the CFO of the company, on the other side. Stay tuned.
The pharma index is feeling quite well actually as we speak. The pharma index has moved higher. That's because Dr. Reddy's, suddenly that stock has recovered from the low point of the day. It's moved virtually to the high point of the day. So keep an eye out on that space. But moving on then, GSPL, that's in sulking in trade. It's down nearly around 6%. This after the company plans to acquire 28% of Gujarat Gas from Gujarat State Petroleum Corporation. We spoke to Mr. Manish Seth, the CFO of GSPL. Let's listen in to what he had to tell us.
GSPC, yes, it wants to cut down its stake in GGL, and it comes at a time when we are also enjoy a lot of synergy. So it makes a lot of sense to buy this asset at this point of time. In the short term, we'll have to take some debt. In fact, if you remember, when we took over GGL from the erstwhile BG, the same thing had played out that time also. Yes, in the short term, any buyout would require some amount of debt infusion. But given our strong balance sheet and strong cash flows, I think we can easily take that debt. And I think in the past also, a lot of investors have been telling us that it would make better sense if GGL were to be under the full control of GSPL. Okay. We have internal accruals, plus we'll be borrowing money in the short term, then which will be refinanced subsequently. Right now, we have hardly any debt. We have only 250 crores of debt. So after this debt will be roughly 3,500. We'll be still below 1:1 debt equity.
All right, we continue to witness some recovery in the mid-cap space. A couple of stocks moving to the high point of the day. MRPL has moved to the high point of the day, and Arvind too. With that, we've run out of time on Chartbusters, but you stay tuned to CNBC TV18. An exciting trading hour comes up next.